for you. So yeah, guys, let's see if I can pull up the whiteboard. Boom. Awesome. So like important thing to remember in this market is all that's happening is a constant battle between buyers versus sellers, right? So if everything is buyers versus sellers, that's what the constant battle is. So the way the market works is it's constantly making it's either trending, consolidating, but there's always an overall trend. So how you identify a trend, right? So let's identify an uptrend. So you start right from your low point. You go up, you make a high point. Boom. Now from that high point, we're going to create a new point right here. This is going to be what's called a higher low point. So we're going to continuously go up, and we're to see how the market's going down in between these points, right? So it's going up, and then it's going down. Then it's going up, and then it's going down. This is how you identify an uptrend. Obviously, it's never this perfect in, candle forms, but we have our higher high, right? We have our higher low, cool. Then we have our higher high. Then we have our higher low. Now, as long as the market continuously makes higher highs and higher lows, it is considered an uptrend. So if you're on a time frame and you're seeing consistent higher highs, higher lows, then you are in an uptrend. Now, what's cool about this is how does it become a downtrend? How does it eventually go into being a downtrend? So let's now show the downtrend side. So I'm going to label this side uptrend. I'm so used to spelling uptrend as trend with TRND. All right, cool. Boom. So this is our uptrend. Now let's go ahead and make our downtrend. Cool. So from our higher high, we have our previous low point here, right? Higher low, right? So this is our higher low. I'm going to draw this line out, and I'm going to go into more detail about support, resistance, things like that. But this is just like a little structure training, just the very simple things that you have to know before you can know anything else. I'm very big about just keeping things simple. So I'm actually gonna. I say we got more people hopping on. This will be recorded, guys, so don't worry if you missed part of this. It'll be recorded. So cool. So this is the uptrend. I will kind of touch base on it just for the people that hopped on the call real quick. We started out, right? This is how you identify an uptrend. We had our low point. We created a high point, which is a higher high. Came down. We created a higher low. So we came up. We found resistance in the market. We came down. We found support. We found support here. Once we found support, that created our higher low. Came up. We broke our previous resistance. Made a new higher high. So we found resistance here, came down, found support here. That made us a higher low, and now we had a higher high. So now, what is a downtrend? How does the market become a downtrend? So the way a market becomes a downtrend, right, is the simple. So we had our higher high, but now instead of respecting that previous higher low point, we're going to break that point to make a lower low. Okay. So now we have a lower low. Cool. So now what the market does next, let's do it from there. If it comes back up, but it doesn't pass this high point, if it just comes up here, doesn't pass this high point here, we now have what's called a lower high because it's lower than the previous high. Again, guys, this is very, very, very simple. Yes, it's just a line chart, but this is the fundamental like beginnings of how you're going to identify things in the market, especially with trends and things like that. So then from our lower high point, we have our lower low point. We pass that lower low point, and now we have a new lower low, right? A new lower low. Go ahead and come up here.
Right. A new lower
Test it right here. So you see how this trend changed? We had our higher high. We created a lower low. Then we made a lower high. This is actually a great point in a downtrend to find entries into the market because you want to enter at the high points, not the low points in a sell, right? So here we go. So here we go, lower low. Now we're going to, again, the market's going to come up.
A new lower low.
But it's not going to pass this lower high point because we're maintaining this downtrend. So again, this is still a lower high. Lower high.
Right. A new lower low.
Boom. So now,
right,
let's just finish out this little downtrend. There we go. Boom. And then we made a lower low. So this is like, man, this is the simple thing that you have to know before you can, you know, really get into the markets and identify trends. You need to know these things. One second, guys. I'm gonna have to mute out because that's. There we go. There we go. There we go. Boom. Cool. 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 All right. So, is everyone seeing that? Like, you see how simple it can be? Because what we have buyers versus sellers, right? Cool. Hello, my bad. Wow, KJ, you should know better. All right. So we had buyers versus sellers, right? We showed you what an uptrend is, right? An uptrend is just consistently making higher highs and higher lows. A downtrend is consistently making lower lows and lower highs. Now, when we're in the actual markets identifying this, it's not as clean as just like, you know, perfect lines. There's going to be a lot of like messy things in between there. But when we can actually identify these areas in the market, that's how you take advantage of catching moves. So this is the super simple stuff. Now I want to go through here and I want to actually, I'm going to delete all this, show y'all about support and resistance. Go ahead and just run through support and resistance with y'all. Again, these are the things that you have to know before you can get out there on these charts and be successful. All right. So a support. What a support is, guys, is when you have, let's see, can I make boxes? Cool, I can make boxes. I don't want to black in. Let's do it. A support is when you have a series of, so let's say it's coming down like a downtrend, right? Boom, 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 boom. Cool. So these are my little candles. They're not perfect, but here they are. Here they are. So price is coming down, right? It's making a little downtrend. Candle, 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 red candle, red candle, red candle, red candle, right? Or whatever your bearish candles are. All right, well now when the market comes down and finds a floor, it's going to find a floor. Okay. This here is called support, where bearish and bullish meet up and find a floor. So here's their floor. This is the floor they found. See it? See how price sits right there? Okay, that is a support. So where you might see something like that? Well, in a trend, you might see something like that when you're looking over here, right? You have price came up, and then let's say this area here looks like this. Red candle, red candle, red candle, right? So it's making red candle, red candle, red candle. Well, then when you have that blue candle close, that now is your support. So you create your support. So this could be this area right here potentially. And like I said, it's always going to look different in every scenario in the market. The market isn't like your friend, you know, like it's not meant to be super clean and easy. The biggest thing to remember is the biggest players in this market are institutions, like financial institutions, and they're there to take retail traders' money. They're there to take advantage of retail traders. So there are going to be like fake out things. There are going to be things that seem one way but are another. But if you just have a fundamental basis and bias and you stick to your trading plan and you really have a great psychology, even if this you're wrong, you know, 3 times because, you know, the market's just playing tricks on you, as long as you're consistently sticking to your plan with your proper risk to reward ratios, you can still be profitable in this market and still can be a full-time trader if that's something you're going after, or you can still at least make money to support whatever you're trying to support. So this is support right here. So now I'm going to show you resistance. So we're just going to bring this down a little bit. Boom, 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 boom. Cool, cool, cool. Great. So here's my little blue candles coming now is where we're going to make them now. Boom. And again, it's never going to be perfect. This scenario doesn't mean it's the end all be all for every type of scenario. So here we go. So we have our blue candles. We're making consistent move up to the upside. Great. So now when the market comes up and we get our red candle and it closes, right? Now we have a resistance. So this is our resistance area, bullish, bearish, right? So down here is our support, and then up here is our resistance. So what does this look like? All right, what this looks like is over here. We have our, oh, what the heck? Yellow is not a good color for that. Orange. All right, so here we go. We had our support, came up. Here's a resistance. So you might see blue, blue, blue uptrend right here. Uptrend, uptrend, uptrend. Create resistance right here at this point. So it might look like something like this. Or, you know, it might even look like, it might even be like this. I mean, sometimes it's not perfect. Like, it's not just going to go straight up and straight down. Sometimes it may like play around with you like this. And then it might, and then after that, it might make a blue candle from there. It might make a blue candle from there. Like, it might do some stuff like this, but this area is that resistance. And then, you know, then from there, it might, you know, it might come down. it might actually come down now and go into, our downtrend, what we were expecting from this resistance. So I hope that makes sense. I hope like support and resistance, like y'all kind of like see like a bigger picture from just that. Everything like goes back to structure in the end of the day. Like I don't care like how long I trade, I'll still mark out my structure. Like I know 6-figure traders that still like mark out their lower highs and higher lows on their chart. Like they'll go up to their chart and they'll mark out on their candles where the lower high is, where the higher high is, where the higher low is. Even though to them it's like elementary at this point. Like they already know it's there, but still they mark it out just to like remind themselves, double back. So let's pretend this right here is this is a market condition. Like this is what's happening in the market currently. I'm going to show y'all like kind of how you could take advantage of this in the market. So we have our support here. Boom. We have our support. I'm just drawing that into the future. Okay. But let's go here into these little areas of support. Cool. So came up, we made resistance. So when you get your resistance or your support, you can draw it into the future, because you want to like be able to see that area. You want to see how the market reacts to that area. So like for me, I see this resistance here. Okay, I'm going to draw like a line from that resistance over, because even though none of this like price data exists yet, none of this exists yet, there's a reason why that resistance was found there. Obviously, there's sentiment in the market. There could be hedge funds placing their sell orders there. There could be banks placing orders there. There could be just some super insanely rich dude that's just like, when it's at that level, I always want to sell and catch a little move. We don't know. We don't know what it is. But I'm going to go ahead and mark that area. So what's cool about this is, right, we came down. I'm going to go ahead and mark out the higher high again just to like redo this. So boom, came up, we made our higher high. Came down, we made our higher low. Well, now we're coming up and we're breaking this resistance. So if you ever heard someone say, man, that broke resistance, like you'll hear that being said. Like, so when this happened here, when that higher high got broken at this point here, and I mean, that could look like a variety of things, but that right there, when that break happened, there it's now looking for a new higher high. So a lot of like amateur traders that are like people that don't know what they're doing will be like looking for entries right here. Like when it's like, oh, it's going to keep going. They're going to see it, like they're going to see it shoot up. They're going to see, oh man, like this right here, it's going to keep going. Like this is time to get in. No, what we do as traders is we wait for that resistance break. We wait for that higher high to form, and we're not entering until we see a valid higher low. And if it works out this beautifully right here, where that higher low happens right here on previous resistance, if something like this beautiful happens where it made a resistance, came down, broke that resistance, and now it's using that resistance as a support, have very strong bias that this is possibly going to continue to go up because it found support at previous resistance. That's huge, guys. That's super huge. That's the majority of trades I take are break retest. This retest here, this is your money. This is where you make your money. This is where you make your bread. You make your bread in this situation here. You find your entry here, then you're looking for the next resistance to take profit, you know, whatever you're looking for, whatever bias you have. But guys, you find entries there, man, that's golden. Break. So a good rule to have, like, is something that I tell myself, no break, no retest. That means no entry. like you stick by that, like you stick to your code of that, and you can save yourself a lot of heartache in this market. You're going to get a lot more confirmation by like finding the finding that actual retest entry. So cool. So now we're going to come up from our higher low, make our higher high, and let's go ahead, since we made a resistance, let's go ahead and mark out that resistance right here to the future. I want to make it the black line. Let's go ahead and mark out this resistance into the future. Great, right? So now we know that this area here is a level in the market where the market was reacting before. So we now have a bias, right? We now have a bias of this area here, this higher low that was created right here. So let's go ahead and extend from our higher low point right here. Let's draw that out into the future. Because remember, we draw our supports out to the future, we draw our resistances out to the future. You do that and it'll help you see things in the market. It's a good place to start. So now, market from our higher high point is going to come down. And what's happening this time? We're going to get a break of this break. Somebody in the chat box that maybe has been watching and paying attention. If this right here was a break of resistance, what's happening right here? Show me y'all are awake with me. Cool. Yeah, so that's a break of support. Awesome. I know you know this, Brendan. We did tons of this. But so right here, you have your break of support. So now that we broke support, we're looking for a retest. We're looking for a retest. We're looking for this area to be tested. So this is a perfect example of sometimes the market just wants to like totally screw with you. Certain people like would be looking like, they'd be like really like, oh, okay. So it broke here. It came down. I might place a sell limit here. And then, okay, well, look at what happened. The market came all the way up to here to make the retest. The retest doesn't have to be pretty every time. Sometimes it can be a retest that it goes a little further than you're expecting. Still a valid retest. This on like some of the indicators we use would probably be like another confirmation. So it broke, came down. We no longer have our having our uptrend here. We're gonna come down. We're gonna make our lower low. Now, what are we looking for? We're looking for our entries on the lower high. That's what we're doing. Because guys, this is what you heard your whole life. Like if anybody there talks about the stock market or anything, they're like buy low, sell high. That's our same thing here. We're gonna buy low, we're gonna sell high. So what does that mean in a downtrend? That means you're not going to buy at your high points, and you're not gonna sell at your low points. Just because the market's showing so much momentum, we're not gonna sell in this momentum here. We want to find that higher place in the market. Because then if we're entering the market, we know, okay, well, this is the previous higher high point. This is a major resistance. You know, I know that it could potentially touch that if it wanted to. So I know the market has this much room to put me in drawdown if I enter here. But it's a lot better than entering way down here and having all this potential room for the market to come against you. So we want to sell high. So that's our selling high. So this is where you would find your sell entries. Boom. This is where you find your sell entries right here. So now we're going to come down from there. We're gonna make our lower low from there. Boom. Lower low. And I mean, you can finesse the market. It's going to make another lower high. Boom. Great. When it makes this lower high, I mean, that's another place to look for entries. Like if you know you're in a major trend, you can find another entry here. Like this could be another entry right here for this downtrend. Because yes, you entered here. The market came down here. You're still in the same entry. Come up here, place another entry. Now you have an entry here and an entry here. And then if you take profits down here, you just set yourself up. You just set yourself up to not only get this whole move here, you also caught this move here. And that's how you make money in these markets. You finesse the market. So like I mean, that's it, guys, in like a nutshell as far as like structure. I mean, you come back here, lower low, draw it over, find these breaks again, right? You had your lower low from your support over. I mean, this stuff is just like, boom, right there. Just like that, guys. So hopefully I cleared some stuff up for, you know, some structure type things. This is the, like I said, the fundamental thing that you're going to be doing the most of. You're going to like find yourself drawing this. You're going to find yourself drawing little markups like this. I encourage y'all, get on a piece of paper and draw something, like draw like some structure and then test yourself. Like even something crazy like this, like draw something to test yourself and say, oh, okay, well, you know, I do see the lower low there, and I see the higher high there, and then like test yourself, like try it out. Like, man, there's nothing wrong with with testing things out and for yourself. Get a piece of paper out, start there. That's where the real juice happens. The best traders I know, they still give themselves these tests. They still will come on and make structure out like this and then label it. Make it more intense. Make it longer. Make it have higher points, lower points, and then find the trend in there. Because if you can identify a trend in there, when you're looking at the candles and you understand candlesticks and things like that, and you apply that with structure, you're able to find those points in the market and have a lot more, you know, just confidence in yourself and confidence in your trades. So, all right, guys, I hope that clears some stuff up. I'll probably drop another Zoom. This one's going to end. I'm just going to go ahead and drop this one so the recording can end. And, but yeah, I'll probably drop another Zoom if people just want to like hang out and like do a Q&A or something. So yeah, guys, much love. I'll be back with y'all.